Welcome to TradeTheMBA.com. This is John's report. It's for the 15th of October, and the chart's a little messier. We had the magenta crossover below, and that led to the decline that we've been seeing. Obviously, it was a bit more exacerbated when you had, Trump's comments built in between there, the whole China situation, and it seems like that's going back and forth at this particular stage. Hasn't been 100% resolved, but they pretended to say nice things politically, and that was enough to satisfy the markets. But it did the nice purge effect, and you still have DOC orange caught between cyan and red, so that's a continuation. You minus 19 from a green standpoint, not low enough to force the recovery turnaround. If you were in the minus 20, minus 24 range, absolutely you're going to get a rebound. But basically, what you're getting is a complete oversold reset within this, general move, and you still move back up pretty much. Finished right at the 76%, and now making the push forward. The key is, are we going to see a close above that for the first time? And that will become critical. Too early to tell with the pre-market, but the negative shakeout starting to have a little bit of an improvement, and you're no longer dipping below the red line. So that becomes important from an extreme histogram standpoint. So the bullish biases within that overall broader negative configuration. Now, the NASDAQ had always been a little bit better. It had already crossed back above magenta, and then the other day just kind of finished in a neutral stance on it. Where were we exactly? 26 to 25.75. So like within a little over a quarter point between the two from the close yesterday. So still bearish from that standpoint, and that it's slightly under from a magenta standpoint, but right on the edge. And you can see no turnaround from the blue crossing back over to give you your, double matching qualification, like right here. This was, when you get the beautiful cross, and then everything just continues to go in the right direction from it. And then steel, short-term buyers have been using everything right now just to keep things where they're at, and that's holding on to things at this particular stage. So you can't complain about that. It's just, it is what it is. And from a treasury standpoint, of course, we're on the weak side of it. The Fed really, even during all of that, not really mentioning or talking about doing anything of import. So the oil situation, interesting. We're still continuing to get the slide in pricing, and so as long as that slide in price continues, we're going to keep an eye on it, because that's where you're going to get your growth factor from. Otherwise, it's deflationary in a broader sense, particularly if it has to go for a long enough range. Obviously, a couple of days is not going to do it. We need weeks of that to build. Euro getting a bonus, from this continuation of back and forth, despite there being no real relevance to it. And then the real winner of them all, gold, getting close to my 4,400 target that I had there way back, almost there. It was ridiculous at the time, but still not so ridiculous anymore. These elements are pretty well built into it. It was the same reason that we had seen Bitcoin in that do what it was doing, and now you look at it, and in this move, it's mimicking more, the liquidation factor. This is that what I talked about, parking money situation. It's not trading like gold, which was impervious to the move completely, because that was being used as a reserve, and everyone wants it more than they want treasuries or anything else, simply because now it's counted as capital, and therefore gold is king. So in a broader sense, it's sort of removed your crypto from that. Now there's still hedges against what you might call fiat currency, but I always saw them as more of that parking element, where you just can set money aside and then move it. Just different than money market, you have the chance for appreciation in that. This reflection of continued selling, and still within its short configuration here at the 23%. I mean, you're still pushing to look towards move to zero. Not resolved. And DOC extremes here under the red line, and DOC still in a continuation mode with orange in between the cyan and red. Yeah, not going to change. But it's an important reference, and you see the slight difference of ETH, but also potentially facing that same situation if it closes like this during the day. But that's just the difference in how they're treated. It doesn't. I'm not getting into the debate as to whether it's currency or anything. It has value and it's traded. Therefore, it's a commodity just like any other, and how it impacts and or is related to others just becomes what it is. And being able to see that is pretty straightforward with the charts. From a 50K standpoint, you can see it was fun with the early dip and then the strong magenta over yellow. Um, where no white was building. Then once white did get above yellow at this particular stage, you still had magenta leading. That is a short cover rally built into it, and you watch that go as to the peak. And then once the breakdown, your expectation was to the 50%. And when that finished just shy of it, well, you're heading back to another 100% plus, because that's going to be another short cover rally built into it, because you didn't reach that 50% that should have taken place, and it didn't. So next run is usually the secondary one that we look for, that typically is the one that results in the correct direction. But now you've pretty much wiped out the shorts that built into the situation that didn't cover from a regular setup, and they're going to take some heat. Doesn't mean the broader short trend still isn't in place, but it certainly creates this where shorting it's a tough game. You've got to be prepared for those big turnarounds, and it happens a lot. It's not usually a one-way slide down until things cascade like they did in 2008. But even before that, 2007 and that late, you would have these big runs, you'd have big sell-offs, but then it would run back up towards the highs again. It was quite a volatile mess, and eventually the cascade of the breakdown, because of the data that was kept coming through, resulted in a much broader and faster decline. But even in that decline, there was still plenty of huge upside moves within the downside. So from an intraday, we saw this was just a straight run up to the peak, and then once they had all those call buyers in there, they just wiped out the gamut from, just pulled it all back and filled in positive extremes, going all the way back to well, literally almost right at the beginning. And then here in post market, things have been nice and rosy. Asian European session, everybody's happy as a lark. So long and the short of it, I think that we're still in for a bit more volatility as we get towards the end of this month. The fireworks aren't done yet, and I think things are just about to get ready to get exciting. So if you don't think that that's a significant thing to say after what we've already seen, it could be, because I think that we're starting to see the budget delay start to grow. Now once you get past 10 days now, and once you get towards 2 weeks and more, then how are they funding things? What's happening with that? It's going to start to have a bit more of a market impact. So we'll see how it plays out. But we'll keep following the readings. As always, anything relevant, I'll put it on the team chat. Have a good one. Trade well.